Today, I want to take a closer look at what's happening with Shopify. Yesterday, the stock dropped almost 12% after that Snap news that pretty much broke the market. And the stock from its 52-week high is down roughly 80%. We're also getting some new news about the e-commerce market from Amazon that I do believe can probably bring some more negative thoughts here on Shopify. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, my new channel, and a lot of great investing links. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, let's take a closer look at what happened yesterday. So yesterday, Snapchat came out with an SEC filing, and they mentioned that, hey, the macroeconomic environment has deteriorated further and faster than anticipated. As a result, they believe that they are likely to report revenue and adjusted EBITDA below the low end of their Q2 2022 guidance. For those not familiar with Snap and their previous guidance, they were expecting revenue growth of about 20 to 25% over the year. So right, in this SEC filing, they don't really mention how much lower it's going to be. They just mention it's going to be to the low end of their quarter 2022. So it's going to be below 20% revenue growth. And I think right now we are in kind of a market where same time last year, any good news was an automatic super bullish news. And I think now any bearish news is a super bearish news. So I think the market is kind of expecting either almost no growth from Snap right now because of what they said, even though there's no real concrete data. Obviously, things like that could happen. There might be very slow growth, maybe even decline revenue growth. But I don't think it's that bad at the moment, but obviously I could be 100% wrong. And the reason this accepts kind of companies like Shopify, and one of the reasons the stock dropped so much in yesterday is Shopify is a company that deals with e-commerce, and they deal with a lot of vendors. These vendors are the ones that are obviously doing a lot of these advertisements in places like Snap and some other kind of advertising platforms. So if they're kind of slowing down their advertising platform, it either means a few things. First, they're probably seeing a decline in net incomes and profits. So they want to lower the amount of advertising fees. These kinds of profit margins are obviously going to kind of maybe prevent certain new people from becoming vendors, which can overall affect Shopify's kind of platform. The other thing that we're seeing is they talk a lot about macroeconomics, and these macroeconomics can also affect kind of consumer spending. And consumer spending, a lot of those fees that sometimes happen in Shopify tools are gonna be somewhat affected. So we can see these kind of both macroeconomics happening with the consumer and the merchants and the business themselves, and their profits are two kind of problems that could be affecting Shopify. I mean, in their most recent earnings, they did mention that revenue was hugely impacted by macro impacts, the absence of stimulus paycheck, and just kind of high inflation and strong labor markets. They also mentioned that the strong labor markets are also offsetting new business creations. So a lot of things are kind of affecting Shopify in their most recent earnings that I believe can continue as the kind of quarters progress. The other thing is e-commerce did take a huge jump in 2021 and 2020 during this kind of COVID timeframe, and things are kind of pulling back. They're obviously still a lot better than they were before, but we can see e-commerce is kind of normalizing again. And this is again something that might kind of short-termly affect Shopify, where it's not growing its revenue as fast as some investors want. I do want to say a lot of this news is definitely short-term bearish, right? I do believe that some of these stuff will affect Shopify in the few upcoming quarters. At the same time, though, I do believe in the long term of things, Shopify will continue to be a leader in its player. So it's all of how long do you have in this kind of investing game. If you have plenty of time, I'm talking about years time frame, then Shopify, in my opinion, is looking very attractive. If you're looking for something for a quick buck in maybe a month or two, then Shopify is not, and maybe most stocks are not the way to kind of go about it, because this is a very volatile market. All right, next I want to talk about some recent news affecting the e-commerce market, and that has to do with Amazon. So there were reports on May 23rd that Amazon aims to sublet, and this is kind of like subleasing some of their warehouses and warehouse leases as online sales cools. So it seems like Amazon might have they might have expected too much growth after COVID. So at the moment, the company is looking to kind of offset about 10 million square foot based on a source reported by Bloomberg. This can actually triple the amount. It can be from somewhere between 10 million to 30 million that they're trying to sublease or end their lease early. Amazon has not commented on the exact quantity that it wants to kind of get rid of, but a spokesperson did kind of announce that they are looking to relieve some financial obligations with existing buildings that no longer meet its needs. There are reports also that the excessive space currently holds is expected to amount to $10 billion in additional costs. So how could this affect Shopify? And I want to say is with their most recent acquisitions. So recently Shopify is planning to acquire Deliver for about $2.1 billion to kind of increase its kind of distribution centers, its kind of global logistics. And maybe some investors might be worried that, hey, if Amazon might be kind of going a little bit too ham on this kind of fulfillment market and kind of these kind of spacing, then maybe kind of this delivery acquisition might not be the best move for Shopify. I personally believe this still is the best move for Shopify, and I think it's more just Amazon grew way too quickly for its own good. The company's gonna continue to do fine, right? Nothing wrong with Amazon, but they were just kind of over expanding too quickly. So I do want to say, like I mentioned, at the end of the day, I think Shopify is sitting at very attractive prices right now. If we take a quick look at some metrics, price to sales ratio is currently at about 8.5. This seems to be the cheapest it's ever been since 2018-2019. And if we take a quick look, this company continues to grow its short-term and cash investments. Revenue continues to grow. They don't have that much long-term debt. With this acquisition, it might change, but they still hold a nice amount of cash, and this company is positive in cash flow from operations. So fundamentally, I personally like Shopify. It is in my portfolio and one I want to continue adding over time. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.